Hey, this is Arthur Hill, Senior Technical Analyst with StockCharts.com. You are tuned in to On Trend, the show designed to keep you on the right side of the trend. So today we're going to start with QQQ and SPY and a bit of broad market perspective. We're going to check in on the big five stocks in QQQ, and then we're going to look at some patterns and how to play them. We've got some flags, we got a couple of reversals in the making, and I want to highlight a stock with a strong and creeping uptrend. So let's start off with the broader market environment. We clearly have large caps leading. We've got a chart here. We've got the S&P 500, S&P Mid Cap 400, S&P Small Cap 600, and the NASDAQ 100 just below. And, just by looking at these, I'll just focus on the top three for now. But what you can see here is that the S&P 500 is above its 200-day. The 20-day is above the 200-day. But if you look at mid caps, you can see that the 20-day is still below the 200-day. And you can see we're still below this high, whereas the S&P 500 is back at this high. So we've got some lagging. We had a deeper decline with mid caps and a weaker bounce, and the same with small caps. You can see that 20-day is well below the 200-day, and price has not really closed above the 200-day. So small caps are lagging. And then you can see if you look down at the NASDAQ 100, it's clearly broken out above out of the pack, so to speak, because that is a new high for 2019. It had one of the shallowest pullbacks and one of the strongest bounces over the last 3 days. But what we can see, I think, here is that the advance is thinning. All right, we had more stocks declining with mid caps and small caps leading lower from late February to early March, and then they haven't been that strong on this bounce. And so that leads me to believe that there is some underlying weakness and we could be in the midst of a correction. So this chart here shows the percentage of stocks above the 20-day EMA for the S&P 500, 400, and 600. And you can see here that small caps led the way lower with that decline below 70%. And then mid caps for the first time since the early part of January had that move below 70%. So two of the three were below 70%, and that's the red line, and that kind of signals when this corrective process really started. And you can see S&P 500 followed suit a day later. So the S&P 500 has had a pretty sharp rebound back above 70%. So the majority of stocks in the S&P 500 are above the 20-day EMA. But you can see this bounce has been much weaker in mid caps and small caps. They haven't even cleared the 60% level. Small caps didn't clear the 50% level. So this is why I think we are in some sort of a correction, and it's perfectly normal. We had a 20% advance from late December to early March. And so some sideways trading, slight pullback is perfectly normal. So we'll look at 3 candlestick charts now to show you what to watch. And on indicators, I'm watching RSI because it's been above 50 since the second week of January for the S&P 500. And it touched 50 there about a week ago. And as long as it stays above 50, the bulls clearly have the edge here. Yeah, we did get a support break there and quite a rebound. And now we watch if RSI moves below 50, then that could lead to a correction, maybe back to this 262, 265 area, if you will. And then we look at QQQ, and it led the rebound. You can see it moved above the prior high. And there is RSI, and it has been above 50 since the second week of January. It held above 50 about a week ago. And so as long as it holds above 50, the cup is clearly half full for this advance. And if we move below 50, then that would be the signal that the QQQ is starting to correct with the rest of the market. And we're going to look at the top stocks in QQQ coming up after this segment. And then if we look at IWM, we can see it's the weakest clearly of the 3 that I just showed you. First, RSI moved below 50. It did not for the other two. Second, you had that support break, and it is holding. SPY and QQQ rallied back to these highs, whereas IWM has just rallied back to that little support break. So, if you're really short term, you could get out maybe a 15-minute chart and just focus on this action here. And I'm sure you're going to see some sort of a wedge and watch for a break of that wedge for the early signal that we're continuing lower after that first decline. Now, the hallmark of this advance has been the leadership from the low volatility stocks relative to the momentum stocks. That would mean utilities, certain healthcare stocks, consumer staples stocks, REIT stocks. Those are the ones that are leading this advance, and the momentum stocks are not. And you can see that clearly reflected when you look at the momentum factor ETF from iShares here. You can see it is well below this high, and there's the minimum volatility iShares, and you can see it's at a new high. And then you look at a price relative, and you can see that here's momentum underperforming low volatility, and it's just been moving flat, that relative strength line. And until it turns up, we don't have momentum leading. And I think if this market is going to have another leg higher, then we need to see a breakout here, need to see momentum leading. And I do mean a breakout in the price relative and a move higher in the actual underlying ETF there. And we can see a similar picture when we look at the PowerShares ETFs that capture that dynamic. There's the PowerShares Momentum ETF, the Low Volatility ETF, and the ratio of momentum to low volatility. And again, you can see a new high in the Low Volatility ETF, and there's the price relative, and we can see momentum is still not outperforming low volatility. So even though we're seeing low volatility outperforming the momentum stocks, I am seeing strength in the technology sector. If you look at the number of new highs in the sector relative to the other sectors, technology is doing just fine. This is the high-low percent indicator, which is new highs minus new lows divided by total issues. And look at technology, plus 19%. So that's almost 20% of stocks in the technology sector hitting new highs, basically. The leaders, of course, are REITs and utilities by far. And then we have materials making a move, 16% for high-low percent. There's the S&P 500 for the benchmark, and you can see 13%, so that's net positive. And then you have the other ones that are kind of lagging. Look at finance, no new highs yesterday. Industrial's not doing so great, and energy, a few new highs, but still not doing that great. So let's check in on the Fab 5, which dominate QQQ or the NASDAQ 100 ETF. If you want to trade the NASDAQ 100 ETF QQQ, then you need to keep abreast of these charts, these 5 charts. So the first up is Apple, and we're going to do a little annotating here to bring this chart to life. So if you look at the base case, basically, you can see we have this pennant formation, and we had a breakout, and we had a pretty hard throwback there, but it ultimately held as we gapped up and moved higher. So now it's time to readjust. And, as a short-term trader, I would have no problem taking a few profits here. We could get up to the 200-day, but if you look at Apple longer term, and therein lies the issue. We got a falling 200-day. We're still well below the 200-day. So, it's not that much of a leader. It's leading, in 2019, but you take a longer perspective and it's not. And then if you draw some lines, now this is early to draw that upper line because we don't have a reaction high there. But if we come down soon, then we would have a potential wedge, and I could just leave support there. We'll call it 170 on a closing basis. So if we close below 170, that's going to be negative for Apple. Now, as long as that wedge rises, there's clearly a short-term uptrend. We look at Amazon, and it's not performing as well. I think it's the weakest of this Fab 5, as I'm going to call them. So Amazon has the flag and the breakout, and again, a pretty hard throwback last week, and then we're getting the bounce this week, and 1600 is the level to watch. You can see Amazon is still below its 200-day. It's a slightly rising 200-day, but if it breaks 1600, that's going to weigh on the market. And then you look at RSI, it keeps failing at the 60 area. So yeah, it's been largely above 50 somewhat, but it needs to get above 60 and get a breakout here to show some serious upside momentum and help the consumer discretionary sector and QQQ. Here is Facebook, and Facebook looks a little bit better than Apple, but again, you can see what's happening here. You have this massive decline, and then you're retracing around 50 to 62%. So you're just above the falling 200-day moving average. And so I don't think you're out of the woods here for Facebook. You know, I could draw a trend line here, but it doesn't look that valid. So I'll just have to stick with a support level because that trend line is too thick. And I would just mark support there at that low from February on a closing basis. So if we close below 160, say, put a little arrow here to mark that. If we close below 160, and I'll color that red because that would be the negative, all right, then you would have a reversal. So you got a level to watch for Apple, Amazon, and Facebook. Apple and Facebook are in uptrends, but Amazon is flat and trying to make up its mind. And that, of course, is the biggest stock in the consumer discretionary sector. So here is Google, and Google got a pennant breakout and is above its 200-day, which is turning up. So this is one of the stronger ones. In fact, I would say it's the strongest of the four that I've showed so far. So Google's looking okay, and you can see RSI, a couple of brief dips below 50, but for the most part holding. And then Microsoft. You know, you look at the new highs yesterday, Cisco and Intel, and Microsoft is very close to a new high. And the trigger there was the pennant breakout there in February. And then we stalled just above 110 and moved higher the last 3 days. So clearly this is the leader. So out of these five, Microsoft and Google look the best. And you can see from the lows last week, we have some support levels to watch going forward. So I see a lot of charts like this one out there. And the question I'm asking myself is, are we going to continue higher with this advance? Or are we going to get that correction or even more to the downside? And I think part of that answer may lie in some of these technology stocks that like hit new lows at the end of 2018, had nice big advances in January, early February. And then we've got these kind of flag pullbacks. And this is Applied Materials. It's a semiconductor equipment stock. And we'll go to the annotate button here. And what we see is basically we have a falling 200-day moving average. So that is a negative. We're below that moving average. So that is a negative. So long term, and then you can see RSI moving below 30 several times and not moving above 70. So, you know, if you look at overall in this picture, it's still a long-term downtrend. And I'll just go to the trash can and I will empty all those and we'll start new. So what have we got going that's positive maybe? Well, it's still medium short term, if you will, but we had a pretty sharp advance there. And we moved up to the 200-day moving average. And that is we can do the percentage change tool here, and we can go from this low to this high, and we can see, I mean, it's a 43% advance. That is a big advance. And then we have this flag pattern forming. And, you know, as far as the pattern is concerned, it looks pretty ideal as far as what you'd want a flag to look like. A flag is typically a continuation pattern. So you have a sharp move up, and then you move lower for, say, 3-4 weeks ideally. And then if you get a break to the upside, that would signal a continuation of the prior move. So if we get a breakout here, then that is going to be bullish for that flag. So you've got a surge. You become overbought here, but RSI didn't, obviously. And now you're working off that overbought condition. And the question is, are we just going to continue that long-term downtrend? I mean, you have to say the long-term trend is down, so that favors further weakness. And in order for this to reverse, we need to get a breakout, say above the 200-day. A break above 40 is going to be quite bullish for Applied Materials and the semiconductor group. So that's what to watch for a potential bigger trend change. So here's Cognizant Technology Solutions, and it's kind of got a similar setup. Maybe it's a little bit stronger. As you can see, RSI did make it above 70 there with that surge into early February. But there is the falling 200-day moving average, and price is largely below it. But we did have this big surge, 60 to 74. So it was over 20%. And now we've corrected with what looks like a falling flag. And if we get that breakout there at 73, I think that's going to be bullish for Cognizant, and that could help propel the technology sector higher. But right now, the bigger trend, I think, is down. And so if you have a mean to short, then your stop loss would be a break above 73, because the bigger trend is down. And this flag technically is a short-term downtrend until it's reversed with a move above 73. Now, personally, I am not one to short stocks because it is too easy to get your head handed to you with a short covering rally, some sort of announcement from the Fed, whatever you want to call it. Usually when it comes to trading stocks, the long side is the best way to trade. And if you look at Skyworks Solutions, you can see a similar flag-like setup. You know, there you became overbought, so that was a strong advance. So a surge and a gap, and you needed to work off some overbought conditions there when you were trading around 85. And so that's what the flag does. But, you know, again, you're below the falling 200-day moving average. This trend is down, the flag is down. And so until we break out at, say, 85, I think that trend is down, and the odds would favor further weakness. If you break out, okay, that confirms the flag, and then maybe we can move up to that 95, 100 area. Now this chart is Symantec, and they, of course, are a big cybersecurity, computer security software company, and they have been going nowhere since May. Had that huge gap down in May, and then basically flat. And if we look at the pattern, there's a potential reversal pattern, and we have a potential flag breakout. So basically, you can see a lot of support there in that 18 area. And I'll go ahead and color that green because I like support to be green. And then, of course, a lot of resistance there from that high around 23. And I'll color it red because red is a good color for resistance. Now, you could probably say there's a double bottom here because you had two lows in the same area, in that 18 area. So I just do the parabola and 3 clicks, and I've got the two lows. And if you measure the height of the double bottom, we can see that from the low to the high was a 35% advance. Now, technically, a double bottom would project up the length of the prior advance. So that's going to be a move to around 30 or the low 30s. And if we see after this gap up, then we have the pattern I was just talking about. It's not exactly a flag, but it's more of a wedge. And it really doesn't matter to me if it's a flag or a wedge. I'm most interested in bullish continuation patterns. So there you can see there's the big surge, that 35% surge to form the flagpole or wedge pole. And there you can see the flag. And they say a flag flies at half mast. So if it rises, it would do this advance, which is about 35% from this low. So it's a little bit different than the double bottom calculation. But clearly we can see a surge, a pullback, and we're getting a breakout. And this one is above the 200-day. So it's a little stronger than the other ones I showed. So the next stock I want to talk about is Illumina. And you can always go to the company's website if you want to find out what they do. And Illumina is in the biotech area. You can see sequencing and array-based solutions for analysis of genetic variation and function. Way above my head, but clearly it's a biotech. So we'll start with a little bit of full disclosure. I do read IBD, Investors Business Daily, and The Motley Fool on a regular basis because I'm looking for stock-specific information. I want to know the underlying businesses of a company, and I want to find companies that might have some sort of secular growth story. Maybe they're in an industry like electronic payments that seems to be a secular growth story right now, or maybe they're doing a niche business in something that has secular growth like biotechnology. And Illumina is one of those stocks that I think has this secular growth story behind it as a company from what I've read. Now, looking at the chart here, this is a daily, but what I'm going to do is I've got my chart style buttons here on the left, and I got my top 3 daily, weekly, and monthly. And I'm going to switch out to a weekly chart for some perspective on this stock. And I'm going to go to annotate, and then we'll put that whole annotation window there for you. So, just looking at it, this is a 52-week high. And you can see that during this period when it was moving higher, look at RSI. This is 14-week RSI. It moved above 50 and it stayed above 50 that entire period. So that was a serious uptrend for this stock. And if you do the percentage change here, you can see that it was up substantially 200% during this time frame. So you're entitled to a rest after such an advance. And we've gotten this pullback over the last few months here. I could draw a trend line here, probably looks better like this. Your trend lines aren't always going to match up to a perfect wedge or channel, but it looks like a correction. And then I'm noticing we got a little break above the 40-week and fell back. And this prompts me to go to a daily chart to study this part of the pattern a little more to look for a potential breakout. But before we do that, you can see RSI got above 50 a couple times but couldn't hold. And so this level that I'm going to watch now is going to be that 50 to 60 zone. And if RSI can get above 60 on the weekly chart, I think that's going to be a bullish momentum development for this stock, and I would become quite interested. One more thing I'll put on the Fibonacci retracements if I can find them. There they are. So if we go from the low to the high, you can see that this retracement is around 38%. So in the grand scheme of things, it's a pretty minimal retracement. It didn't get down to that 62% area around 220. It's held up in this 280 area. So I'll go ahead and close that and save it. And now I'm going to go to a daily chart by clicking on this chart style. And we can focus on this pullback that we're currently in the midst of. So we can see that I'm going to have to lower that screen a little bit. So there's the pullback. There's the, robust trend line that exactly touches that high. And then you can maybe do an internal trend line. But, trend lines are very subjective. I'm not a big fan of trend lines. But what you can see here, I think that is becoming positive is, the stock held support there in that 270 area twice. And it got the bounce and it got back above its 200-day. It fell back again, but I'm going to see if it can get back above that 200-day and this high. I think it's going to be on its way to continuing that bigger uptrend I showed on the weekly chart. So that's one to keep on the radar. So next up is Fabrinet, and it's one I came across several months ago. And if you go to their website, you can see they're basically in optical, electrical equipment for original equipment manufacturers, you know, lasers, automotive, medical, industrial, and aerospace. And if you're on a sharp chart, you can also click that button there for full quote and then update it. And you can see technology, electrical components, but you know, that's just a broad term, electrical components. You need to dive in. And if you look at the weekly chart, you can see it's been a strong uptrend with RSI above 50 since the early part, like May 2018. But I'm more interested in the daily chart here. So on the daily chart, we have what I would call this kind of creeping uptrend. You can see we had strong momentum back in the early middle part of 2018 when we were moving above 70 for RSI on a regular basis. But you can see since December, RSI hasn't been above 70, but nor has it been below 40. So it's kind of in this tight range as the trend slowly moves higher. And that's what that RSI range is telling you. You can see it hasn't been above 70 here, nor has it been below 40. But the cup is still half full because you can see higher highs and higher lows throughout this advance. So there's clearly a stable uptrend here. Now, as far as entry points, it's really hard to pick them because, yeah, you had this, you know, big gap and breakout. So if you buy the breakout, well, you kind of have to wait for things to settle down. So then we had a consolidation here and a consolidation breakout. So that was one of the better signals. And then we had a long pullback here. And, you know, if you were really antsy, you got a little false breakout there. And then we got another gap and breakout, another consolidation and a breakout. And you can see if you're not catching that breakout early enough, you know, you're getting throwbacks back towards your breakout. But I think the important thing is look at how consistent this trend is. And it's really consistent when you look at it relative to S&P 500. So if I click on this chart and put the S&P 500 behind it, well, I'll go ahead and put it below to keep this chart up there clean. So we can see here, and this is a tell that you've got some serious strength going on in the stock because, you know, look at what happened to the S&P 500 here. It had that very sharp decline in October, November, and December with new lows. And then you can see Fabrinet was making a higher low from October to December. And that was a clear tell of relative strength. And you can also see that, you know, when the S&P 500 wasn't even near its December high, it was already hitting a 52-week high. So there's a lot of strength in this stock, and I think it's one you need to keep on your radar for when a setup that you like does appear. And just a programming note that you can see on trend on Stock Charts DV, there's a link at the top of every web page. And if you scroll down below the currently playing show, you will see the schedule for the upcoming shows. And the current show is in red. And there we have On Trend on Tuesdays and Thursdays at 10:30 a.m. And it's repeated at 11 a.m. and throughout the day. And if you miss any of these shows, just look for the little arrow to the right, and that is a link to our YouTube channel. And that concludes this edition of On Trend. Thanks very much for tuning in, and have a great day.